Hey everyone, and welcome to This Explainer. If you've been watching the markets lately, you already know the landscape is shifting at absolutely breakneck speed. Just reading the financial news isn't cutting it anymore if you want to stay ahead of the curve. So today, we're unpacking the exact playbook of Dan Martell. He was actually voted the #1 angel investor in Canada and is co-invested alongside the founders of Google and even Jay-Z. He's completely revolutionized how he invests his money, making way more by leveraging AI to spot the right opportunities and dodge the bad ones. We're going to break down his actionable AI investing playbook and shift our mindset entirely from just preserving what we have to actively creating more.
Okay, so let's talk about this fundamental mindset shift for a second. Traditional wealth preservation is basically like building a giant wall around your money. It might feel safe, but it fundamentally blocks other money from coming into your life. True wealth creation, on the other hand, means looking at your dollars not as things to hoard, but as little soldiers. You deploy them out onto the battlefield to work for you and capture more value. Because when your money is out there working that hard, you eventually reach a point where you don't have to work for money at all.
To get those soldiers properly deployed, we're going to follow a clear 4-step playbook. We'll cover spotting hidden opportunities, red teaming your ideas, monitoring your asset dashboard, and finally, sticking to what you know. Let's get right into it.
All right, play number 1, spotting hidden opportunities, which is all about finding those second and third degree plays. You know, the real investment wins, they are rarely the obvious stuff you can just casually Google. Like, if you want to invest in the whole AI boom, the super obvious play is buying stock in Google or Nvidia. But everyone is already doing that. The AI-level insight is about digging into those second and third degree plays that unlock the real value. For example, to power all those massive Nvidia chips, data centers need tons of energy. So a smarter play might be investing in energy infrastructure, or even the companies supplying the commercial electricians needed to actually build all this stuff. AI does the heavy digging to find these adjacent winners before anyone else is even talking about them.
So how do you actually pull this off? Well, you're going to want to treat this exact prompt like a master recipe. Open up your favorite AI model, Claude, Gemini, ChatGPT, whichever you prefer, and feed it this command. Tell it to investigate a specific industry or trend that you're interested in. Then ask it to map out the second and third degree winners and losers. Tell it to identify the suppliers, the adjacent industries, and the companies ripe for disruption. And finally, ask it for 10 specific company names you wouldn't naturally think of. This literally forces the AI to look past the surface level and hand you a curated list of hidden gems. Once you've got those 10 unexpected names, you follow up immediately with this second prompt. You ask the AI to run a deep analysis of recent market trends and key signals around those specific 10 companies, and have it highlight where the real actionable opportunities are. Instead of spending weeks reading through incredibly dry financial reports and market analyses, you're just letting the AI do all the heavy analytical lifting for you. It perfectly correlates the data and defines exactly where deploying your capital actually makes sense.
Moving on to play number 2, red teaming your ideas. This is where we battle test everything before deploying a single dollar of capital. Now that we've spotted an opportunity, we absolutely have to battle test it. So what exactly is red teaming? Basically, it means purposely trying to tear your own brilliant idea apart with brutal honesty. Before putting money in, you need an ego-free, completely agenda-free partner to tell you everything that could possibly go wrong. Martell actually almost invested in a personal finance AI tool recently because it looked amazing on the surface. But when he used AI to red team it, the model pointed out massive risks about big tech companies launching competing products in that exact same space. That simple little red teaming exercise literally saved him from losing millions of dollars. Knowing what can go wrong dramatically increases your odds of keeping your money safe. What's super interesting here is the precise wording of the prompt itself. You have to command the AI to take the gloves off. You type, "I'm about to invest into this company. Let's play out the worst case scenario and give me the 10 reasons why I would lose all my money. Be honest, be brutal, don't be nice." What you get back is a highly customized hit list of objections. Your job as an investor is to look at that list and ask yourself, honestly, if you have a confident answer for every single point. If you can't confidently overcome those AI-generated objections, you simply walk away from the deal. And here's a quick insider pro tip for your battle testing phase. Do not just rely on one single model. Run that brutal red team prompt against 2 or 3 different top AIs. Claude might catch a regulatory risk that ChatGPT totally misses, while Gemini might spot a supply chain vulnerability the others overlooked. Cross-referencing these blind spots gives you this amazing 360-degree shield. Like Martell says, sometimes the very best deals you will ever do are the ones you almost made but smartly walked away from.
All right, play number 3, monitoring your asset dashboard. We like to call this the set it and forget it system.
So, if your deal survives the brutal red team, you're going to need a scalable system to track it. Legendary management consultant Peter Drucker famously said, "What gets measured gets managed." And that is so true here. To make your money grow, you have to monitor it effortlessly. Here's a 4-step workflow to let AI do exactly that. First, list every single asset you own: real estate, vehicles, stocks, private companies, the whole shebang. Second, prompt your AI to build a live dashboard tracking the health and price movements of that list. Third, explicitly tell the AI your long-term financial goals so it has a direction to guide its analysis. And finally, step 4, sit down once a week, maybe a Monday morning when you're fresh, and just do a quick review of the data the AI compiled for you. To make this even more powerful, you should really utilize the advanced features in these models. For instance, you can ask Claude to build an interactive artifact directly in the chat interface. This magically transforms a boring wall of text into a beautiful, centralized visual dashboard. You can have the AI assign red, yellow, and green health statuses to all your assets, generate spark lines to show trends, and even set up a daily cash email alert if an asset drops or spikes by 10%. Instead of logging into a dozen different clunky banking platforms, your AI synthesizes it all into one crystal clear picture. And finally, play number 4, stick to what you know. This is the ultimate human filter.
Because listen, even if you use AI to flawlessly spot and red team your investments, it can all go to zero if you ignore this golden rule. Just look at this number, $100,000. This represents a really painful lesson Martell learned about 15 years ago. He bought a bundle of incredibly cheap homes in Detroit for around $8,000 each, totaling $100,000. 18 months later, he realized it was a complete and utter disaster. The homes were falling apart, they were totally mismanaged, and his entire thesis just crumbled. Why? Because he wasn't a real estate guy. He had zero unfair information advantage in that market. The biggest risk isn't just losing money, it's wasting it on things you simply do not understand.
AI can analyze data incredibly fast, sure, but it cannot replace your human intuition, your personal network, or your unique edge. Before you deploy your little soldiers into any investment whatsoever, it has to pass these 3 human filters. 1, do I actually know about it and have an unfair advantage? 2, will I actually pay attention to it? Meaning, is the check size big enough for me to really care? And 3, will it be true in the future? Are you investing in a massive 10-year trend or just a fleeting fad where you'll have to constantly redeploy your capital all over again? Let's look at how a successful deal actually passes the test in the real world. Take an investment Martell recently made in Hark Labs. They're an embodied AI company powering future robotics. Let's run the filters. Do I know it? Yes. He's deeply embedded in the AI space. Will I pay attention? Yes. He wrote a large enough check to guarantee his focus. Is it true in 10 years? Yes. The thesis that electrified items will become cognified with AI sensors is a massive long-term trend. It's a clear yes across the board. Warren Buffett doesn't invest in tech because he doesn't know it. Know your edge and fiercely stay in it. When we pull all of this together, we arrive at a pretty profound realization. The next decade of wealth creation, it's not going to belong to the people who are just good at randomly picking stocks. It is going to heavily reward the system builders. It rewards the people who know how to seamlessly collaborate with AI to map out those hidden second-degree opportunities, aggressively red team their own biases, and build automated dashboards to protect their capital, all while sticking firmly to their own circle of competence. Your money should be out there on the battlefield, working just as hard for you as you worked to earn it in the first place, right? By adopting this exact playbook, you stop building walls around your wealth, and you start building engines for serious growth. So I'll leave you with this final thought to consider today. How will you start using AI right now to build your own unbreakable investment system?